Zoetis. I have seen this company in the past. It's been a while. Discovery, development, manufacturer, commercialization of animal health. Perfect. And this one here, even Scott's due diligence, and I'm going to do a live stream with Scott later today at 11:30 Pacific. He's done reviews of Zoetis. I don't know if I have on my channel, but I know I've looked at this stock. And looking at their website, let's look at their website just to get more familiar. So at least in the US, and I don't think it's different. I know in Mexico, it's the same thing. People love their pets. They're part of the family. And from an investor perspective, the things that I like from a business that is for animals is that you're kind of removed from the whole healthcare insurance industry, which has a lot of rules. And like, hey, when I go to the doctor, like I caught a cold and I went to what we call an urgent care, which is doctors. And then they saw me. Okay, you just have a cold. You don't have COVID. You don't have strep. You don't have the flu. Here's a pharmaceutical or some prescriptions we recommend. Perfect. And I went through that whole experience. That whole billing process is pretty complicated and expensive for businesses to maintain. But from what I understand, when we used to take our dog to the local vet, we'd go in and we'd pay cash. And the vet would collect cash, and we were happy because our dog was healthy, and they would give them all the vaccines and stuff that they needed and so forth. So that's a big difference, and that might be quite lucrative, if that makes sense, right, Kiter? You follow the difference? Yeah. So I always thought that's not a bad idea. Or a farmer, right? They're like, hey, I have a herd of cattle and I need to make sure that they're in good health because they're an asset. And I want to make sure I can, at some point, I guess, harvest the meat, butcher the meat, whatever they do there, and then take it to market. So when they pay for healthcare for those animals, they pay cash. So let's see if that logic holds through their financials. So first, what's it been doing for the past year? It's down 15.8%. Why is it down? Interesting.
Yeah, because of the litigation that I told you about.
Okay, tell me more about the litigation.
I know that it started in the EU, that they sued them or had a claim that one of their medicines created some pain. I think that mainly with dogs.
Okay. All right.
That's a big drop that we see there in May. You see the boom, boom, boom. They went all the way down here. Yeah, that's where the claim came about.
Man, well, if they end up going to court, are they going to have these dogs testify? Just joking. You know what I mean? Like they've been suffering, and they'd get a dog up there and say, "Hey, tell me about what you were feeling." All right. So the company's troubled with this lawsuit. It's a pretty good market cap. Look at that, 74 billion. Interesting. Okay. Revenue. Okay. And FYI, like litigation doesn't scare me. 3M was heavily discounted because of its litigation, and I followed it. And once I felt like, hey, they're getting that behind them. And it started with, I've known of 3M since I was a young adult. And when I went to college, 3M was like one of the companies that we would study because they did a lot of things right. They've been around for more than 100 years. It's a good company. It's good people. They made some mistakes, and the mistakes they made were real, and people really did get hurt. So they took care of that, and they moved forward. As an investor, I bought at the right time, and I made money. So let's see, first, I don't know Zoetis. So I would encourage you to think about what your impression is of the company. Had they had similar problems in the past? Like, oh man, this happened 15 years ago. They had to, come to some type of settlement, and they paid out, and then 5 years ago, and now it's back again. It's like this organization keeps getting themselves into trouble. I'm a little concerned about them. They're not a good actor. Is that your impression? Or is it, hey, these guys have been doing a nice job. This is a science. Something went wrong. Okay. Potentially. Maybe nothing went wrong. Mm-hmm. And maybe there's just, pet owners are claiming something that maybe can't be proven, and Zoetis will be cleared of those charges. Okay.
Actually, when you were looking at it, I was searching here, and I see now an article by Reuters that the EU antitrust started investigation. That's not even litigation as of yet. It just started investigation. And I don't think that it's been developed into a real antitrust issue.
Okay, and antitrust is a whole different matter for me. And I actually think it's a positive because not to sound like an quote full-blown capitalist, but I look for businesses that resemble monopolies. Why? Because they're so good, they don't have any competitors. They're so strong, their products have barriers of entry like patents and secret kind of ways of doing business, and they have the best customer adoption. So, okay, let's see how that sorts itself out. But that's less damaging, and I would have less fear around it than they made products that really killed a lot of dogs, and owners were really mad. All right, so they continue to grow their company. That looks good, really good. Okay, and the quarterly, they're at 11%. That's very good. That's excellent. So growth is accelerating. So we're going to look at margin and free cash flow. So gross margins, excellent, 70%. Free cash flow, growing. So the fundamentals keep getting better and the stock price is dropping. I like that. It's a good opportunity. So their free cash flow in the last quarter really jumped up. You have the story. Okay, good. And I'm going to put you on mute, Uncutter, because you have a lot of background noise. So, man, this is like interesting. And it's super interesting because the stock price is dropping, but their fundamentals are significantly expanding. It's like, okay, all right, perfect. I'm okay with that. I'm okay in investing in companies that are misunderstood. And then the market wakes up in the middle of 2025 and says, wait a second, this stock needs to go up 30%. That'd be great. So I love their cash flow. And their trailing 12 months cash flow is a little high. It looks great. I'm not going to take that number into the valuation because it'd be a little too optimistic. Instead, what I'm going to do is I'm going to say, okay, 2.3 billion, awesome. 1.6 billion, great. 1.3. So it has shown a growth pattern, but it's been a little bit of up and down. So it was 1.4, went down a little bit, went up, went down, went up, and then for all we know, it's going to come down. So I'm going to say, okay, if I took these two numbers and added them together, I'd get close to 4 billion divided by 2 billion. So I'm going to use 2 billion as my trailing 12 months free cash flow. All right. They're growing at 9% in the most recent quarter, and they're growing their cash flows faster, which is good. All right, we'll use that. And I'm going to grow free cash flows by 8% to be conservative. It's lower than their current growth rate, but I'd rather be conservative. And if I'm wrong in the future, it's like, hey, you made a mistake. The stock's not worth $100 or $200. It's worth $400. Oh, man, too bad. Now my stock went up even higher. No problem. Okay, so we got that information. Let's start a quick valuation spreadsheet on these guys. And before I do that, let me look at, we got 8 analysts. They think it's discounted. Even the worst analyst is like, this stock's discounted. And they're expecting the revenue to grow by 5% in 25, almost 7% 26, 6.7%. Go ahead, Tomas.
And before making the valuation, can we take a look at the chart one time?
Mm-hmm. Where the stock's been?
Yes, the last, 5 years.
Sure. So I like using Google because it gives me a little more functionality. Man, look at that. It's kind of just gone sideways. For a while, this thing was moving. Look at that. Woohoo. Up 118%. And then here, the company started to not work. So,
it makes sense. It was coming up around the COVID era where everybody were in their homes and they are adopting animals, dogs, pets, cats.
I was in Mexico City at the end of 2022. And that's what people told me. They said that in Mexico City this year, the growth in pets, especially dogs, small dogs, was like so fast. It was like people just had to have an animal. And then that market expanded. So yeah, it expanded really quick, but we're seeing that they continue to grow their revenues. It's like, the market's just not appreciating the stock. So I'm glad we looked at the stock because it really hasn't, it's not a clean stock like, or I should say, see how this sold off? And it sold off during 2022, which is when a lot of stocks sold off. I would expect it that this stock, and it did to some extent, right? It did go up for a while, not as nicely as you would have thought, by 36%. And then since then it hasn't done so well. All right, so since these guys are somewhat like healthcare and they're a little bit smaller, we'll go to United Therapeutics and copy this model. Forgot to look at their balance sheet, so I'm probably going to look at their balance sheet next. All right, so ZTS. And this is it Zoetis? Zoetis.
Zoetis without the C, yeah.
All right, so for a discount rate, let me look at their balance sheet real quick and just make sure these guys aren't sitting on a bunch of debt and are just full of problems. Debt, 6.78 billion. Cash, 1.7, so about 5 billion. And EBITDA is 3.76. Yeah, no problem. They get paid off in a year and a half, 2 years. So balance sheet's good. Now, this is a smaller name. It's not Johnson & Johnson. Interest rates have been staying a little higher. So I'm going to go with 8.5. Maybe since they have that story in Europe, we'll go 9. Okay. So here we said we're going to go with $2 billion as a starting point. And I'm going to grow that number by 8%. And the growth rate in the first 4 years, they're doing really well. Grow by 8%. Long-term growth 4%. So the intrinsic value is $44.6 billion. The cash on the balance sheet was, I think it was 1.7 million. And then the debt was about 5.7 billion. Market cap, 74 billion, 260 million. Oh, I put in the wrong field. Shares outstanding, 451 million shares outstanding. So the cash flows are not up to the level that clearly make this a discounted stock. It's a $2 billion cash flow amount. I was a little bit conservative. I didn't take the trailing 12 months, but I think I gave them, enough credit looking at the average. I did grow it by 8%, and we're falling short on the valuation based on free cash flows. Let's look at their earnings per share. So the company is expecting to produce $6.45 of earnings. They are growing. So, I like their business. They do have a little bit of risk. $6.45 is the earnings per share. And I'm not going to go above 18. It's growing by about 6%, so I'm going to grow by 4%. Again, I try to be conservative. Now, why am I not going to go above 18? And again, we have choices in the market. United Therapeutics is growing by 30%. They have great margins. They do healthcare for humans that have these rare diseases. So I'm not going to go above what I have for United Therapeutics. I'd rather buy more United Therapeutics stock. And this stock here is just a little too expensive. And the market maybe is telling us that, hey, there's just not enough fundamental value for it to start rising and really rallying. Here it rallied on the story that, hey, a lot of people are become pet owners because they're lonely. COVID took them away from social places. So they were buying a lot of pets. And there was an expectation that this company was really going to expand their free cash flows and so forth. And the reality is the fundamentals did not support this price. So it dropped. And now I don't see how the stock is really supported for it to be a discounted stock. I actually think it's overpriced. Even if I said, okay, I'll give them a lower discount rate, we're still nowhere near their valuation. So that's where I'm at with Zoetis. And I've looked at this stock in the past, and it's not on my watch list. It's probably because I saw the same thing. I probably looked at it a year and a half ago, and it's like, well, let's look at just comparing it to United Therapeutics. This company market cap, and I think this market cap is probably not accurate. So market cap $16 billion, $7 million. So I'm paying, the market cap of this company is 74. So that's like 4 times bigger than United Therapeutics. But their cash flows are not 4 times. They're only a little less than 3. More importantly, the growth rate of this company is much faster. They're growing at 30%, not 9%. So there's just a lot of things that I like more with United Therapeutics. They also have very unique drugs that are really serving people with the diseases that they cover really well. So Zoetis would be a pass for me. Any questions before I delete this, Enkider?
No, thank you. One thing that still make me wonder is why all these analysts are rating it as a buy or strong buy and give it such a high valuation, but maybe they see some trigger that it yet not seen in the numbers.
I think mainly because analysts really focus on earnings per share, and earnings per share is the easiest metric for them to see how everything is based on earnings per share. And like Charlie Munger, he did not like earnings per share. He just felt like this number has too much. The management at a company has too much influence over earnings per share. He didn't touch it. He only used free cash flows. I use both, and I put more of the value or the basis on free cash flow. And this is why these analysts are probably like, hey, this stock's discounted because the earnings per share is really going to grow. Maybe.
Mm-hmm.
But that's the only explanation I can give you for the moment.